Well, let's talk about Meta stock. The hype is real at the moment. This stock just keeps going up and up and up. And today we're going to talk about Meta a little bit, but not just Meta. We're going to talk about the lessons to be learned from this stock, because there is plenty of lessons to learn from this stock. And hopefully, after you watch this video, you walk away feeling like you're Warren Buffett. So we'll see what's going on here. So Meta at the moment is on an insane rally. It's up nearly, 3% yesterday. And even in after hours, it was up 1.5%. And the stock rally continues on Meta from where it was $360, and then it started crashing all the way down to $88 was its 52-week low, and then we rally up 224%, and it went all the way down to 12 times earnings. And this is the thing, we're not talking about an unprofitable stock here, we're not talking about a growth stock, we're talking about one of the biggest companies in the world. You know, people struggle with this concept that you have stocks that will move, and even one of the biggest companies in the world, a 754 billion market cap company, can have swings like this in a share price. And it shows you that volatility can happen in the stock market. But right now, I have never seen anyone or everyone so bullish on Meta. Never. I know that obviously we had this dip here, and when we had this dip here, it was so hard to find a bull on Meta. It was so hard to find someone that was bullish on Meta, and anyone that's bought in that time frame has done obviously really well, but they were very quiet. You weren't being too loud, because if you were too loud, you got shot down big time. And personally for me, I own some shares in Meta. I own some position that's up 50%, a position that's up 8%, and it's one of those stocks like we talked about yesterday. It's so good to be making money again in the stock market after what was such an awful 2021 into 2022. We move into 2023, and it's so good to be making money in the stock market again. And Meta is one of those stocks that is currently making me good amounts of money. But it was so hard to find a bull. If you were bullish on Meta only 12 months ago, you were alone, and you were not being too loud about it. And now I look around, and it shows you how many more people are bullish on Meta and how quickly it can change. You know, I was looking the other day at this article, and I was looking at the old comments and saying how brilliant it is, how it's going to, carry on going up. Seeing an actual commenter called Invest in Meta. Imagine having your Seeking Alpha name 12 months ago called Invest in Meta. You know, if you were called that commenting on these posts, I could tell you as a content creator that was making content in one of the worst bear markets that we've seen in so many years, I could tell you, if you were a bull in a bear market, you were getting absolutely destroyed and abused in the comment section. Now, I tell you, if you're called Invest in Meta 12 months ago, you are getting even more destroyed and abused in the comment section. But it shows you that the stock market is a crazy place where the momentum can change so quickly. You know, you're talking within a year, the momentum changes from this is the worst stock ever, this is awful stock, so this is the best stock ever, this is a must-own stock. It changes so quickly in the stock market. This is a prime example of how momentum can shift in a stock so quickly. And it seems like even now, I would say even more now, the momentum seems to shift in stocks so quickly. You can go from a stock being the best stock around to the worst stock around, from the worst stock around to the best stock around. And this is what I say with stocks that I own. You know, you've got to be prepared that right now this might be the best thing since sliced bread, but you give it a year, there could be something that happens that means that stock loses 50% of its value. Same when you talk about a stock that's down in the dumps 50%. You know, out of nowhere, that suddenly, for some part of news, everyone suddenly flips and goes, actually, this is the best stock ever. It can change so quickly, the momentum in the stock market, from stocks that are high up, from stocks that are down low. And we've seen that especially in the last 24 months. So I wanted to talk about that very quickly. That bull and bear flip can change so quickly, and I think people don't realise that. The next thing is metric expansion. Now, you look at this here. You look at the volatility in the share price of Meta. You'd think that fundamentally, financially, there's been a rapid change in the financials inside the business. And there has been a little bit of a change in financials in the business. Meta went from a point of view where they ended up growing a little bit slower. They ended up going where their profit was a bit lower. But all of a sudden, you saw the point of view where everyone kind of threw Meta under the bus. And when you look at the metric expansion, the biggest change here is something like, if you look at something like total enterprise value to EBITDA, historically, it's always been around a 13, 14. All of a sudden, we went down to a 6. We over-halved overnight. You look at free cash flow, same again. You went from a high 20s down to a 19. Normalised earnings, you went from 23 down to a 15. Even it was at an 8, but obviously it hasn't picked up that point of view. And this is a book that I read, 100 Baggers, and this actually summed it up so perfectly, and it changed my mind with my mentality of investing. Quite often, people think share prices move off financials, and eventually they will move off financials, but they don't always move off financials. If they moved off financials, you'd just see stock charts just slowly ticking up nicely. But that doesn't always happen. You have stock charts that are like this here. Up, down, up, down, up, down, up, down. And the biggest thing that will move and make returns in your stock market portfolio is metric expansion. And that is clear when you look at Meta's metrics. Sometimes you have a stock that's the worst, or the market feels is the worst stock ever. So what they do is they think, oh, we're going to put that down at your lowest metrics you've ever been, and the share price gets compressed. All of a sudden, it becomes the best stock ever. And all of a sudden, Wall Street and analysts value it at the highest metrics it's ever been. And quite often, that is what moves share prices and what can be the biggest return on your stock. All of a sudden, they think that this stock should trade at low metrics and it loses 50% of its value. Next thing is at high metrics, it gains 50% of its value, 100% of its value, and it recovers it all. So quite often, the big thing of what can move stocks and share prices is financial performance, but it's not always, because if it was financial performance, it would be a very steady stock chart, but that doesn't happen in the stock market. You'll see stocks that are up, down, up, down, up, down, and that's metric expansion or contraction. Whatever the market feels, if they like the stock, they'll put it at a higher multiple. If it's a stock they're not liking at the moment, they'll put it at a compressed low or lower multiple. And that's what happens. That will be the biggest driver of a company, say HIMS, for example, a stock that I own, a growth stock that I own. The market currently puts it down at like 2-3 times L's. All of a sudden, the market goes, oh, HIMS is a great stock. It's the best thing since sliced bread. You know what? Let's put that at a higher metric expansion. Let's put that up at 6 times L's. And then the stock rallies up 100% for no reason. Financially, there's not been that much change to justify a 100% jump in the company. It's only steadily growing profit and revenue as it keeps going moving forward. But there's a big jump in the share price, and that's because eventually Wall Street goes, oh, let's have it at a higher metric expansion, and it doubles. And that's the big thing that can move share prices quite a bit. When you're wanting to get a return on a stock, you are wanting financial performance, but you also, for the big returns, you're also praying that Wall Street goes, let's value that a higher company now. And that is one of the big drivers for stock prices, return and compressions. And that's what happened with Meta. There wasn't that much change in the company. There was some change in the company, but there wasn't that much change to have the stock go down this low and then rally this high. The only thing that was changed is that all of a sudden Wall Street went, let's value it really low. Now let's value it really high. So just something to point out there. Next thing, so the shares are doing really well at the moment. Obviously, everyone loves Meta stock right now. And then recent reason why the shares are rallying is to do with Meta launching Threads. So it's going to be a friendly alternative to Twitter. Anyone that knows Twitter, I don't think you'll be able to find a friendly alternative to Twitter, because that place, wow, that is a toxic place. But yeah, they're obviously going to launch a app that's going to counter Twitter. And probably the reason why they're looking to rival the likes of Twitter is because obviously Elon Musk took Twitter on, and a few people aren't happy with the changes that he has made to Twitter, especially the one that he made recently, which is the Twitter's rate limiting ratio that they have at the moment. And I agree. When this came in, I actually use Twitter quite a bit. I mostly use it for sports, and I agree. I was using this the other day, and I was like, what is this new feature? I was going a little bit off topic, but some of you guys may know, may not know, I'm quite a big ice hockey fan. And I pretty much like every sport, but I like one of the sports in particular I like is ice hockey, and it was the draft. And I was watching the draft, and every time a team was picking a new player to join the team, I was looking to see what everyone's reactions were. And obviously you're refreshing it quite quickly as the picks kind of come through, and every time you're trying to refresh it and see what everyone's saying about these picks, it kept coming up error. I said, what is going on here? This is a terrible feature that's been added in, and obviously trying to push more users to go onto the Twitter verified. Is it Twitter Blue they call it? And I was like, this is a terrible adding feature. No wonder everyone's going to get annoyed every time you're wanting to refresh what's going on and it comes up with this. This is an absolute terrible move. And I am a Twitter user and I do generally like Elon Musk and like what he's done with Tesla. But what he's done with Twitter, I generally, as a user, I think he's killing the platform a little bit. So I think there is room that Twitter Meta potentially comes in here and makes an alternative, especially if they can link it in nicely where you link it up with your Instagram, your WhatsApp, and it's very easy to post between the two. It could actually do quite well. But I won't get too excited because it's quite hard to knock a Goliath off its pedestal like Twitter. And that's an example when you look at what Meta actually tried to do a few years ago. This was really 2019, 2020. Some of you guys might remember this. I own a stock called Pinterest. I started buying this stock in 2019. I bought this stock after it IPO'd. The stock started going lower and lower, and I thought, you know what, I really like Pinterest and its unique platform that it has here. Started buying it. Obviously, the stock went absolutely ballistic. I ended up making 300 plus return on this stock, and I ended up selling, I think, over half my position in this stock. And it just shows you, there's so many stocks that we've sold on this channel for profit, and the amount of times I hear stocks that come up skills is down, and it's like, I never hear anyone mention about Pinterest that we bought, a couple of years ago, and then it made a 350% return or whatever it was. Absolutely crazy. It's funny how everyone always talks about the losses and never talks about the stocks that are up. But hey, never mind. But obviously, I made a good money on that. The stock then actually went lower, and right now I've actually been buying back up quite a big stake in Pinterest, because I still think it's a very good company. But that's a bit off topic, but the point is that Pinterest was a platform that was doing really well. Obviously, Meta looked at that and went, we could do something like that. And they launched Hypeee, that was basically a rival to Pinterest, and they thought, let's get in this space. Now, on the day, Pinterest actually dropped. I remember on the day that when this came out, Pinterest actually dropped 10% on this news. And everybody was worried, Meta's coming into our space. It's a bit like a retailer when Amazon comes in this space. Everyone's like, whoa, what's going on here? We don't like this. The big dogs coming in. And everyone was worried that Pinterest was going to get eaten by Meta and their launch of Hypeee. Now, obviously, they launched this this article here is from February the 13th, 2020. And within July the 1st, 2020, they ended up shutting down the Pinterest competitor. Almost nobody knew. So, even in the perfect time, when everybody's at home in the CV times in 2020 and they launched an app that is for projects that everyone's working on, everybody at the time was suddenly getting into gardening or painting the house. The perfect time to launch an app like this, and they struggled and Pinterest beat them. So I've seen Meta and Facebook do this before many times, and I will believe that it's a serious app when we come back in a little bit, and I'm starting to see a major amount of user traction going on there. So we'll see what happens. And it leaves it to the last question, which is, where am I at with Meta at the moment? Am I a buyer? Am I a seller? I'm not a buyer. I think you always get them dips in Meta where I've seen it plenty of times. I've held this stock since I think I've had this stock for 5-6 years now. It's been quite a long time I've held it, and I remember this dip here. The shares that I held for 4 or 5 years. On this dip, I was down on. That's how low it went at the time. I remember looking at my broker's account going, how am I down on these shares that I've had for so long? Obviously, not the case now. Obviously, them shares are doing absolutely amazing. But Meta does have dips. Meta is a volatile stock and it can have dips. And I would wait, personally, for me to have them dips. And also, I have a good position as well, so I don't need to chase it. So I'm definitely not a buyer. Selling, I don't want to sell. I could potentially sell maybe 10 or 20% of my position because it has been, it's in euphoria mode right now. And the classic saying, when everyone's bullish, I'm bearish. When everyone's bearish, I'm bullish. I always do the opposite to the market. So I'm looking at that thinking that I potentially could, everyone's thinking it's the best thing now, is probably the euphoria stage where it's probably a good time to be selling. Metric-wise, it's not expensive when you look at historic metrics. It's about right. So, same again, it doesn't justify it's crazy overvalued right now, but there is definitely euphoria out there. So, maybe it makes sense to maybe trim 10-20% of the position. I might do that. We'll see what happens. But as from selling all of it, I don't want to sell all of my position in Meta because I think that I don't know if we'll ever see it at these levels again. I think Meta could easily have 10-20% dips in the future, but I don't think we'll see it at these levels again. And I look at Meta, and realistically, will Meta be around for the next 5-10 years? And I think so. You know, that Meta, the Facebook platform will be around. I think Instagram will definitely be around. WhatsApp will be around, and all these years we've known how successful Facebook's been, and social media in particular, and there's still not someone that's knocked Meta off. You know, it's thrown at the moment. You know, you've had the likes of Snapchat, and Meta, you know, beat them, you know, with its stories. You had the likes of TikTok, probably the biggest threat that we've finally had in 20 years. It took 20 years for someone to get to the levels of Meta, and even then I'm looking at that one and thinking, well, you know, they've combated it perfectly with Reels, and also you've got the risk of that, you know, TikTok could potentially ever, you know, get banned from certain countries as well. That could be a major driver for Meta, and you don't have that risk. I don't see the platforms Meta have going anywhere in the next few years, so I don't want to sell because I might not ever be able to buy these cheap shares again in a company like Meta. So I will always hold Meta shares, but the only thing is, do I take, you know, 10%, 20% off the table? And that's potentially what I line up. At the moment, though, I don't need the cash. I don't need the cash at the moment to go buy anything. There's not anything that I'm looking at in the market and I'm thinking that's a screaming deal. You know, maybe 4 or 5 months ago, when, you know, you had PayPal down at $58, when you had Google down at $90, you know, if I saw them again, then that day would come where I'd go, right, time to sell 10-20% of that Meta position and put it in there. But until that day comes, I don't have a plan to sell 10 or 20% shares in Meta. The only other thing is that potentially if we get to the likes of where we, you know, $300 plus $400, and then we start seeing the metrics a little higher than what it's historically been, then that might be the point where I go, okay, now I've got to take something off the table because it shouldn't be this high. You know, financially, it's not as good as where it was in 2021. Maybe that's where I do take the profit off the table. But yeah, that's kind of where I'm at right now. I'm not in a rush to trim it, but if I needed cash for something, I could trim it. So that's, you know, where I'm kind of at the moment anyway. So hope you enjoyed the video anyway, guys. I hope there was some useful information in there and a few tips and tricks as well that you'll take on going forward. And as always, if you could hit that like button, that's absolutely amazing. Catch you in a bit.